Well, for more on all this, let's bring in Casandra Winzar, recently appointed as the Chief Economist with the Committee for Economic Development in Australia, or CEDA. Cassandra, many thanks for your time. Congratulations on the new job. Can I just ask you, in regards to where the Reserve Bank in these minutes shows its interest rate settings are? We also heard from Michelle Bullock today talking about them trying to drift the inflation rate lower and hang on to as many jobs as they possibly can. That's honourable, but there must be a point at which inflation becomes a worry for the Reserve Bank, and maybe that's what we've seen in the past couple of months.
So thanks for having me, Ross. And look, I think what we've seen in both the minutes and in Michelle Bullock's speech today is a real commitment from the RBA to getting inflation under control and to trying to get under control quickly. And so far, that hasn't been happening at the pace at which they'd like. So I think what we can tell from the communication out today is that we can expect some further rate rises. We can absolutely expect unemployment to increase. Michelle Bullock's speech made that very clear, that employment at the moment is actually, there's too much employment and the unemployment rate is too low. So we can expect the unemployment rate to increase. And that's adding to the inflationary pressures in the economy. So the RBA remains really committed to pulling inflation down. And the current economic data is showing that it's not coming down anywhere near as quickly as they'd like.
And there's a little bit of nuance here, isn't there? And this is that this notion of full employment, and Michelle Bullock talked about this, but it's not something where you can just put your finger on it and say, there's full employment, we need to raise interest rates, or there's full employment, we need to cut interest rates. It's a little bit more, opaque in terms of trying to find it.
Absolutely. So there's no exact setting for what full employment is or what level of employment we should have that won't contribute to excess inflation. So the RBA has tried to look at it from a variety of different views and different data sources. And what they have come up with is that we are at or we are above full employment. So that means that the demand and supply of labour in the economy is a bit out of balance at the moment. There's too much demand for labour, and that's adding to the inflationary environment that we're in at the moment. It's very hard to tell if that, we've got the exact right number or what the exact right number is. But currently, unemployment rate is sitting at around 3.6%, and the RBA is expecting that it will get up to somewhere around 4.5%. I think what's really important to remember here is even that 4.5% figure is a really low level of unemployment if we look over the past few decades. If you'd asked any economists 3 or 4 years ago in the pre-COVID environment, would they like unemployment at 4.5%? We would have been celebrating that sort of number. It's really very low. So even if we are expecting this increase in the unemployment rate, and the RBA is suggesting that we need this increase in the unemployment rate to get inflation under control, it shouldn't cause too much concern in the community because it's still a really low level of unemployment. And the vast majority of Australians that are able to and wanting to get a job will be able to get one.
And there's the point, isn't it? Because those people who are most frightened are those who have got big mortgages, who are really feeling the pain of the 12 consecutive rate rises with potentially more to come. And they're fearful of losing that job. But while there's another job to go to, they're fine. It's when there's no jobs to go to, that's when there becomes an economic crisis for Australia.
Exactly. When we start to see the real impacts of things like large mortgages and interest rate rises, are when people do lose their jobs and they're not able to continue to make their financial commitments. We shouldn't expect too much of that to come. We know that a lot of Australians have actually pretty big buffers on their mortgages and relatively large saving amounts, and we don't expect the unemployment rate to get out of control. It will certainly be challenging for households, particularly those with large mortgages or households in the rental market where rents have been very high. So those cost of living pressures are likely to remain for some time. But that trigger from high unemployment, which can cause instability more broadly in the economy and financial markets, is unlikely anywhere in the near term.
And Cassandra, real quick one for you. Just how many rate rises should we expect from here before we get to the end of this cycle?
Look, I expect we'll have at least a couple more to come. So I think there's a good chance we'll get another 25 basis points rate rise next month. And every likelihood we'll have at least one more after that. And it will probably be some time as well until rates start to come back down. So the RBA is going to have to be really confident that they have inflation under control before we see much relief there.
Casandra Winzar from CEDA, many thanks for your time, and no doubt we'll talk again very shortly.
Thanks, Ross.